Hello traders and friends, you can follow me at Gumby9662C on Twitter, and these are not trade recommendations, just some ideas that I'm floating in the back of my head. And like the video if you like it, and make as many comments as you can at the bottom. I appreciate it. Appreciate the feedback, because I'm here to learn too. All in all, the markets are still very bullish. But the biggest red flag which I saw happening this week, that was the 2-year Treasury yields started to collapse, driving the notes higher. And we've been in this consolidation area for a while now, and as of Friday, the 2-year yields were collapsing, driving bonds higher. So that's something to really be concerned about on the financial front, in my opinion. And this was quite strong volume that we're seeing in reversal here in the 2-year notes. So this is a warning that possibly the financials run is come to an end. Another area to be concerned about, your emerging markets. We did close right below this uptrend line, and we closed below our signal line. So we might start seeing, but the volume's not supporting the move yet. Just keep an eye on your emerging markets. Another area to keep an eye on is your global equities index. Okay, this is the broadest index out there. We came down to this uptrend line Friday, and we bounced off support back to our signal line. So we're still not getting above average volume, but this is something to keep on your watch list for possible continuation and monies coming out of the global equities. I did a few comparative charts. Now these, they're just comparison of two different asset classes. Like this one here, I compared gold to IWM. And if the Russell does start showing some relative weakness, it looks like gold might start outperforming the Russell. Now that does not mean the gold's going to go higher. It just means that gold might do better than the Russell here in the near term, based on my charting pattern, what I'm looking at here. Here's another comparison. This is a global growth index. We've really been going into growth up till December, and globally wise, we're starting to move more to value stocks as an asset class. So just keep that in mind also, that the global stocks have been moving out of growth ever since December. Talking about the IWM versus SPY, typically when it crosses this red line here recently, it gets a little chop for a few days, but that's a reactionary sell signal for the IWM, and we crossed below that red line on Friday. So that does not mean we're going to go straight down, but it does mean we're likely to test the bottom of the range once again. So just a heads up, things are looking quite weak for the IWM. Another area which I'm kind of looking for some weakness relative to the S&P 500. So I'm beginning to think that the transports are going to start underperforming to the S&P 500. So if we do get continued upside or even get weakness in the S&P 500, I do think the transports are going to start leading to the downside based on my charting pattern here. Now your steel stocks have been showing some relative weakness the past couple days, but I do want to point out this is a very bullish chart versus the S&P 500. Okay, and we have not broke trend yet, but I do think we're going to see some more weakness to retest the uptrend. There's still more room to the downside on your steel stocks before you even catch possible trend change. Now your semiconductors versus your NASDAQ, I do think we are putting in a topping pattern for the semiconductors versus the NASDAQ. That does not mean the semiconductors is not going to go higher with the NASDAQ. It does suggest that on any pullbacks, the semiconductors will lead lower on the NASDAQ versus other sectors. Now, if the SPY does want to continue higher from these prices, right here, right now, we are going to have to see rotation into the energy sector. We are at a critical test point for XLE versus the S&P 500. I mean, right here, we should catch responsive buying, but that's not necessarily the case at these record highs in the markets. Also, your XLF, we got this uptrend here, and as of Friday, we broke below the uptrend versus the XLF and the SPY performance. So this is another one that suggests that we're going to have some, if there is a pullback in SPY, the financials are likely to lead the way down, in my opinion. Another theme we saw the past few days is rotation back into value and safety away from the more riskier, some of the more riskier sectors. And here's with the XLU versus the SPY, we have been chopping out this bottoming range here. It looks like your XLU is about to start outperforming the S&P 500. Now the one outlier is your XLV or healthcare versus the SPY, and they have been, here recently they were really oversold coming into off the election, and we've been getting some relative outperformance versus the SPY, but you can tell that the healthcare has been in a long-term downtrend versus the SPY, and we are testing recent highs. So if the SPY continues higher, the healthcare is likely to get more rotation into it, in my opinion. But if the SPY does start to struggle here, I would think continuation to the downside, because this is a risk-on asset. Continuation to the downside in healthcare is likely. Another one of my comparative studies that I do want to compare here, consumer discretionary, which is a risk asset, it started underperforming the XLP, and we're slowly breaking this upper distribution, which we've had for since November. So just keep that in mind as of Friday, that we are getting more weakness in our consumer discretionary. Now another sector is your XME versus your SPY. Now this has your metals and mining, okay? Your gold miners, silver miners, coal miners, all of them are lumped into this thing. And we are starting to break this uptrend as of Friday that we've been in here. So just keep this one in mind, that your metals and mining might start lagging. But this is still an early indicator. I just want to point this one out. Another sector I want you to keep an eye on, this is your S&P 500 listed semiconductor stocks versus SPY. And we are testing the uptrend. We're right down here next to this uptrend. I do think we're going to probably get a rollover here. I did mention in my prior video, I think Cisco Systems is a short here. We're back at 2008 highs, and Cisco is going to have a major impact on this pair correlation. Okay, to finish my video out, one thing to really keep a close eye on is your dollar. This is your dollars. DX is the dollar futures contract, and we broke down below this trend line Friday, but we managed to rally back up. But we are below the 50-day moving average on this trend. And if we continue to see weakness in the yields, like we saw on our 2-year treasuries, it's likely we're going to see the dollar continue to fall here. Okay? So just keep that in mind. We have the elections coming in Europe and stuff, that's going to put pressure on the euro, which could very well keep the dollar elevated here going into the elections. So, but yeah, if France decides to leave the euro, if that party gets in, then the dollar could be strong all the way into spring. So that's all I got to say. And these are just some ideas I'm floating. Be careful with your trading. It's really hard to short this market. So, but you can see some rotations. It's out of safety and into more defensive sectors. Thanks a lot.